hello. Hi, how's everybody doing out there? Let's get IG going. Good afternoon, good afternoon. How are you guys doing on this lovely Tuesday afternoon, actually. It's a little bleak here in LA. I know the clouds are overcast a little bit, but all in all, it's a beautiful day. Hi, guys. Elaine Proby here, CEO, PROBY'S Tax and Accounting. And we're back again, bringing you guys some valuable information, of course, that can help you tax-wise with your personal and your business financial needs. Okay, so today I want to cover a topic that is very, very common. I get this question all the time. Everybody is out there doing business of some sort, either as a sole proprietor or you may have formed a corporation or some type of entity, guys. So everyone is out there forming a business or using their automobile for business. What we're talking about today is, can you write off 100% of your vehicle for business? And again, this is a common question. I want to try to cover this today really briefly in like 3 different points. I mean, there's a lot to get into, but I'm not going to make it really complex. So I just want to point out a few things, pointers, and we'll talk about 3 different things about, can you write off 100% of your vehicle? Okay. So you guys hit like and share on this video, get your friends on board, and let's jump right into it today. Okay. So let's talk about your vehicle. Now, everyone has to use some type of transportation in their business if they're self-employed or have any type of small business, right? Whether you are operating a huge entity or whether you're doing your personal business. And transportation is the key. Of course, you got to go from one place to the next. You got to get supplies. You got to see clients. You got to use your vehicle for a lot of reasons. And, it's a form of transportation, getting around and make the business happen. So, of course, it becomes a business deductible expense, right? Now, but the key thing I want to talk about, and this is so common, everybody gets this, everybody's calling, can I write off my car? Can I write off my car? And the thing about it, guys, like anything else now, the business use of the car is what you can deduct. So we're talking about number one is the usage deduction. And you have to have your business use, because that's what you buy the car for. If you only have one vehicle, if there's only one vehicle you have, the business percentage of that vehicle is what you get to deduct. Okay. So now if you have a vehicle that's dedicated just for your business, then 100% of that vehicle is a deduction. So, but if you have a vehicle that you are using for business and personal, right? For business and personal, what you have to do, you have to determine the business use of the car and what is the personal use of the car. Okay. So make sure that you guys make a note of this. If you have more than one vehicle, because sometimes some people will buy a vehicle just specifically for their business. And in that case, you don't have anything to worry about. I have my personal car. I have my business car. My business car is 100% deduction. My personal car, I don't have to worry about writing off anything there. And you want to try to make sure that you keep it nice and clean. Back again, if you have one vehicle and you're using that vehicle for personal and business use, you have to determine the business percentage and what is the personal use. So 100% of your vehicle, 100% of the business use of the vehicle is what you can write off. And so a lot of people get this confused, and I want to make sure that you guys get this really clear. It's not everything that you get to write off 100% on the vehicle. So what you do is you have to figure out the mileage and what portion of your mileage is the business use. So if you use the car to go out and see clients or take out clients or go to business meetings, or anything that's related to your business, those mileage, those mileage are 100% deductible, and that's why you figure out what percent of the vehicle. So if your vehicle is used, let's say 40% for business or 60% for business, the other 40% is personal, and then what you want to do is you want to determine how much of your expenses that you'll be able to write off for your business use. All right. So let me get this clear. It's the usage. It's not just 100% of your car. It's the usage. The business use is what you will be able to deduct the amount of dollars for that. Right. Now, there are deductions that's related to that, of course, in the form of actual expenses that you use the vehicle for the vehicle is used for, your gas, your wear and tear on there as far as the insurance, maintenance and all that stuff. There are two ways that you get to deduct those deductions, right? You can do one by actual expenses, and the other one you can do by a depreciation method. And so the actual expenses or the mileage expense, I'm sorry, the actual or the mileage. The actual expenses, again, that has to do with your depreciating the car. It has to do with the gas. It has to do with your insurance. It has to do with registration. And those are the things that you get to deduct a percentage for business use, right? Or you can use what they call the standard mileage rate. And the standard mileage rate, again, that's based on how much miles you drive the vehicle for business. So I think here, what I just want to make clear is deducting 100% use of your vehicle. As long as you know what your business percentage is, you can deduct 100% of your business portion of the expenses of those vehicles, right? So that's my number one point. So let's go to number two. Number two, there's cost and limits. Now, where cost and limits comes in, guys, you have to know that you can't go out and buy a luxury vehicle, right? A luxury vehicle, and decide that, okay, I'm going to go out and spend a lot of money on this luxury car. So because I can write it all off for my business, So there are limits on this luxury vehicle. There's limits on the luxury vehicle. So you have to keep in mind that there's always some type of cost and some type of limits that is going to be applied to these deductions, right? So the government doesn't want you to go out and buy a Rolls Royce and all luxury vehicles if that's not the kind of business that you're in and expect to write it all off. That doesn't work. On the luxury car limit, there's about $10,100 that you get to write off. And with what they call a special bonus depreciation, that amount is only like $18,000. So you don't want to go out and get you a $100,000 car because you think you can write off $100,000. So you have to, one, know exactly what you're doing. What's the purpose of this vehicle? If you are not in the business, let's say you're in the business of leasing Rolls Royces or whatever, that's your business, then it makes a difference. But if you're operating your personal business and you want to get you a car for business, guys, don't go out and just get a luxury car because you think you can write it all off. So there's cost and there's limits on there. There's also a limit on these depreciation. Now, everyone is talking about this bonus depreciation and all this stuff. There's limits on that as well. There's limits on how much you get to deduct. Like for 2020, okay, so the bonus depreciation runs about $1 million, but that means that's on all of your assets. That's on several cars, so there's a lot in there. However, on each item, there's a limit on that as well. So guys, I want you to make sure, again, it's very misleading when someone say, write off 100%, get a car, write it off 100% of it for business. But no one is explaining to you that there are limitations on this stuff. There's a usage of this stuff. There's business use. There's a limit on a cost and limit on how much you can write off. Okay, so I'm just trying to make sure that you guys are not being misled and going out and spending money and purchasing a vehicle for the simple fact that you feel that this is going to be 100% deductible. It's going to help my business and, it's going to save me a lot of money in taxes. Okay. So that's the second point, the cost and the limit. Again, you're not going to go out and spend a lot of money on a luxury vehicle and is only able to write off $18,000 between bonus depreciation, Section 179 deduction. You're not going to go out and spend all that money just because you think you can write it all off and save you a lot of money. Okay, so make sure you get some tax consultation before you make these moves. All right. So again, today, guys, thanks for jumping on here. What do we have over here? Hey, Mahogany, thanks for jumping in. All right, you guys. Thanks for jumping in over here. Let me turn this so I can really see. Thomas Zero, thanks for joining. All right. So today, guys, we're talking about can I write off 100% of my vehicle for my business? And that's what we're discussing today. And I'm pointing out 3 reasons today. And the first one was usage of the car, the vehicle, and as to what you can deduct. And the next one is cost and limit. And the third point I want to make today is whether you should buy, purchase, or lease. This is a huge question. Get this all the time. And you know what? It's still a little confusing to a lot of people. A lot of clients ask, or people ask all the time, should they purchase or should they lease the car? So there's several things that you have to consider between purchase and lease. Now, when it comes to, say, the tax consequence of it, you get deductions either way, in different formats. Right? So none of it is going to go to waste. You're going to get deductions in different format if you purchase the car. If you purchase the car, you get to write off the depreciation, you get to write off all of the gas, all of the insurance, all of the expenses related to that car. If you lease the car, you get to write off the lease payments, right? The owner of the lease payments, you get to write off because the company that owns the car, they're depreciating it. They're taking all that other deductions. So you get to write off your lease payments. And of course, you get to write off the gas that you put in the car. But you can't take depreciation on a leased vehicle. You cannot take depreciation on a leased vehicle. All right, so purchase or lease. And then there's several things that you need to consider because in the long run, it can cost you more money if you lease the car. Think about the mileage. How much are you going to be running this vehicle? Because, there's always this mileage cap on lease vehicle, guys, where if you exceed a certain amount of mile per year, you have to pay additional fees. Think about the buyout costs. You can set up and you can lease a vehicle. You can wind up paying it for 3 years or whatever the lease is. Then the buyout becomes a whole nother number, right? So you're actually paying for this vehicle twice. So you have to consider a lot of stuff, whether you should purchase or whether you should lease the vehicle, right? And to see what's more beneficial. All this stuff got to do with a lot of tax planning. And you got to also do the numbers. You have to know if you're going to be doing a lot of driving, how fast you're going to turn over the vehicle. Now, there's the expense deduction on both ends. You get to write off deductions on both ends business-wise, which will help you on a tax bracket. However, you want to make sure that overall costs is going to be more effective, whether you purchase or whether you lease. So if you're going to be doing a lot of mileage, you don't want to pay penalty on those excess miles. If the vehicle's going to be, if your vehicle going to be used a lot, we're running back and forth, like for instance, I know I was driving hundreds of miles a year and leasing a vehicle didn't make sense to me because I covered that 10,000, 12,000 miles that they gave me in, less than 2 months. So that didn't quite work out very well. So, of course, then you have all this extra penalty for these mileage. So, someone, guys, consider where you are, consider the mileage, and make sure that you don't lease a vehicle that's limited to the mileage and it costs you a whole lot more. Again, no matter whether it's a deduction, it reduces your bottom line, it reduces your profit, and of course, it's into your cash flow. So purchase or lease. Now, again, those are things to be considered. You will be able to write off the lease payments that you make for that car. And you will also be able to write off, the gas and things like that on there. But at the end of the day, you may be paying a lot of additional monies because of the mileage use of that car. Okay, so pay attention to that. All right. So you guys, if you have any questions, you guys can put them at the bottom here. We'll come back through and answer them. Hi, Laverne. Thanks for jumping on. Good to know. All right, good to know. Hi, Inez. Hi, sis. Okay, so guys, today again, like I said, 100% vehicle. Right off of your vehicle. Everybody gets this confused. Everybody wants to go in and get a vehicle just because they think that they can get this huge tax benefit and write off everything. There's limits. I want to cover the 3 points that I'm making today. The usage deduction. You have to have a business use for it, and you have to determine what your business use is. So you don't write off 100%. You only get to write off that portion that's your business use. If you have 2 vehicles, one is used 100% business, then that's 100% you get to write off, right? Second point is the cost and the limits. You want to purchase a vehicle that's conducive to your business. You don't want to go out and buy you a huge luxury vehicle and figure out I spend $100,000 on this Rolls Royce because I could get to write it off. There's only limits. Depreciation is limited to $10,100. Bonus depreciation is only limited to $18,000 write-off. And so if you spend $100,000, and that's what you get as a deduction, then your cash flow suffers. One, because it's not going to bring you that much, save you that much taxes to where it's going to compensate for that. Okay, so you have to make very sound business decision, guys. All right, I have a question over here from Lee Smith. Are businesses the only one allowed to write off vehicle? Our businesses. Well, businesses are allowed to write off vehicle, but then, as an employee, guys, you can write off some mileage. Now, if you are an employee who works somewhere and you have to use your vehicle for work, if it's not reimbursed, if your use of your business vehicle is not reimbursed from your job, you get to write off those mileage. Now, the rules have changed with the federal government as far as miscellaneous deduction, which are those mileage. So you don't get much advantage of taking those business mileage anymore on your personal tax return as an employee, even though you can write it off. But if you are in a state, for example, the state of California, they still allow you to get those personal miscellaneous deductions. So it's still some benefit there. But no, you don't necessarily have to just be a business. But if you use your car for work, again, the federal have changed the rules in the last few years on miscellaneous deduction. But if you're in a state like California, you get to still write off the business use of your car as well. So that's a good question, Lee Smith. Thanks for asking that. All right. How you guys doing over here as Uber ends? Let's see, as an Uber Eats delivery driver, what can I write off? I live in New York. Okay. Good to know there's a way for employees to get that deduction. Yes. Okay, and as a Uber Eats employee, what you get to write off, guys, you know, as Uber driver, you're driving your own car for the most part. I know that they have some lease situations where you're driving their car, but if you and you're leasing the car from them, and so all those payments that you pay them for those lease payments, you get to deduct from the money that you make. If you're using your own car, you get to write off the mileage. I do know that they clock the mileage when you go and make those stops. They clock those mileage as well. But then you also have mileage that, you know, it's probably not clocked in between there. So you want to make sure that, you know what the mileage are. So you get to write off your mileage deduction, right? You get to write that off, guys. So if you're an Uber driver, you get to write off the mileage as a deduction against the monies that you make. All right, so that's a good question. Hi, we're done. I'm glad you asked that. Beautiful. Okay. So any other questions, guys? This is great. Again, I know, like I said, it's very misleading when someone say write off 100% of your vehicle, but the business percentage, that's what you get to write off. And you want to make sure that you know what that is, right? Based on the mileage. If you drove 20,000 miles for the entire year and 10,000 of that was business related, then 50% of your car, you get to write off all the expenses related to that. Hi, Erica James. How you doing? I'll be contacting you soon. Okay, I'm waiting. Thank you for tuning in. All right. And why bother to lease? Good to know. Why bother to lease? Well, why bother to lease, guys? That's a good question. Why bother to lease? Leasing of a vehicle sometimes becomes it's easier to obtain, right? Because when you purchase, remember, when you purchase, they want a down payment. And a lot of times they want a down payment on a purchase car. I mean, they've got a lot of programs now where they may not even be asking for that. But, it was said before where you used to have a down payment to purchase a car. And a lot of times, depending on the amount of what the car costs, it's a lot. Lease, for the most part, it was easier to get simply because you walk in there and they may ask you just for 1 month's lease payment. Which, if the payments, let's say, is $900 a month, it's only 1 month's lease payment or 2 months lease payments, and you pay taxes and license, and you're out the door. So you could be out the door with a car that costs $30,000, with less than $2,500. Whereas if the car costs $30,000 and they wanted you to put, say, 10% down or 15% down, then you are, having to find more money to put down, $3,000 or $4,500. So a lot of times leasing is a lot less money up front. And that was one of the biggest attraction of leasing versus buying, the money up front, and you can get the vehicle that you want. All right. And then you just make those payments. So that's what that is. And then again, like I said, you just have to make that decision. If you're going to do a lot of driving, leasing is not the best thing because, of course, you got to pay penalties on those extra miles. All right. 12,000 miles. I'm not sure what the maximum is that they allow now. And that's nothing. We knock that out in a month, right? Or in 2 months. In my case, I was doing 100 miles a day, so I was knocking that out in no time. So my leased vehicle, and I leased the truck at one time, was like, oh, I'm driving too far. And so, no, it just wasn't the right idea. Okay, so that's good. I'm glad you guys have these questions. Again, thanks for tuning in. You guys, can you write off 100% of your vehicle? Okay, yeah, so that's what we're talking about today. Let's recap one more time. I just want to talk about the usage deduction. And that's determined by how much you use the car for business. The cost and the limits. Again, you don't want to get too extravagant and get in a luxury car. There's limitation on that stuff. The government is not going to allow you to write off any luxury car and give you this maximum deduction on that. There's limits to that. And then, of course, should you purchase or should you lease? And there's tax benefit in both places. One is easier to obtain, help the cash flow, but you have to remember you can't do depreciation on a leased vehicle. You can do it in a purchased vehicle, and you have to take it in the year that you buy it. So there's a lot of different criteria is there. Okay, so make sure that you guys get some consultation on this stuff. You're getting ready to do something, call somebody. Elaine Proby here, CEO of PROBY'S Tax and Accounting. PROBY'S Tax and Accounting have been here, guys, serving the community for over 35 years, and we can help you with all your tax and financial needs, business and personal. We're here to allow you to understand this stuff so that you can better understand your cash flow and manage your cash flow, right? So you can have more wealth at the end of the day, right? So that's what we're here for, guys. I want you guys to give us a call here at 323-290-9034, PROBY'S Tax and Accounting, or visit our website at probiztax.com. Visit our website. We do taxes all over the U.S. It doesn't matter where you are. We can take care of you. Everything is done electronically. Everything is uploaded. Everything is e-file, DocuSign, e-pay, and so on and so forth. And then, of course, you can get this great consultation if you have any questions. This is all free, guys. We're going to be putting out some information where we're going to be structuring a program that will allow you, especially the new entrepreneurs, that will help you to build and grow your business. All right, so look out for that coming up soon. Again, I want to invite you guys to come back here on Thursday. And Thursday, we're going to talk about what we're talking about Thursday. Thursday, April 15th, we're talking about claiming tax credits. Oh, yeah, this is a good one. Claiming tax credits, guys. There's a lot of tax credits that is more beneficial because some of them are refundable credits. Sometimes you can get a refund check, even if you paid no money into the government, through tax refundable credits. Okay, so we want to talk about claiming tax credits, and we can get credits that offset the tax liability. So Thursday, come back here at 1 p.m. You guys turn on your notifications so you can know when we come on with a lot of this great information. Visit our YouTube channel, guys. We're trying to build that up. So going over there, there's a lot of great stuff for you, a lot of great videos that's there, and that will help you along the way. So with that said, I think I'm up out of here. I want to thank you guys for tuning in. Really do appreciate it. This has been fantastic. Hey, Dale, thanks for jumping on. Hi, how are you? This is beautiful, guys. I'm up out of here again. I will see you guys back here Thursday at 1 p.m. Let's follow instructions and let's stay safe again so that businesses can pick up. The economy is growing a little bit, so we want to get back on our feet so we can get on the other side of COVID and be able to put more money in our pocket. All right. So with that said, guys, I will see you guys back here on Thursday. I want y'all to take care of each other and take care of yourself. All right.